Have you ever wondered what happens when the futuristic decentralized world of Web3 crashes into the old-school powerful world of traditional finance? It's not a collision, it's a convergence. What was once a playground for crypto enthusiasts is now becoming the backbone of a new financial era, creating brand new ways for us to own things, exchange value, and participate in the economy. Today, we're diving deep into how these two worlds are evolving together and what it means for the future of your money and the internet itself. Let's start with Web3. It's grown up a lot. We've moved way beyond the hype of just speculative assets. The Web3 market was valued at over $2 billion in 2023, but hold on. It's projected to explode to over $33 billion by 2030. That's not just hype. That's a sign of serious institutional confidence. So, what are the big trends driving this? First up, big companies are jumping into decentralized finance or DeFi. They're using it for real-world stuff like managing supply chains and financing trade. This is happening because we're finally getting some regulatory clarity, which is like a green light for major institutions to get involved. Next, and this one is huge, is the tokenization of real-world assets, or RWAs. Imagine taking a piece of a skyscraper, a famous painting, or a vintage car, and turning it into a digital token on the blockchain. This makes it possible for anyone to own a small fraction of these valuable assets. Suddenly, things that were only accessible to the super wealthy are now open to more investors. This sector is already valued at around $185 billion, with some experts predicting it could reach a mind-boggling $16 trillion by 2030. Another critical shift is sustainability. Remember all the talk about how much energy crypto mining used? Well, the industry listened. Ethereum's major upgrade, known as the merge, switched it to a system that cut its energy use by 99.95%. This sets a new standard for environmentally friendly block. And what happens when you mix Web3 with artificial intelligence? You get super smart decentralized apps. AI can help smart contracts adapt to new information on their own. And decentralized AI networks mean we can train models on data without compromising privacy. Speaking of privacy, that's another driving force. People are tired of big corporations controlling their data. Decentralized social media and digital identity platforms are emerging, giving you back control over your own online life. The market for these platforms is expected to grow from about $18 billion to over $141 billion by 2035. The very foundation of Web3 is also getting a massive upgrade. We're moving from clunky one-size-fits-all blockchains to modular designs. Think of it like building with LEGOs. Projects like Celesta are separating tasks like security, execution, and data storage into different layers. This makes the whole system more flexible and way more scalable. At the same time, a technology called zero-knowledge proofs is changing the game for privacy. It allows you to prove something is true without revealing the actual information. Imagine proving you're over 18 without showing your driver's license. That's the kind of power we're talking about. Of course, established players like Ethereum are still dominant, thanks to their huge developer communities. But rivals like Solana are pushing the envelope with incredible speed and low fees. And then you have projects like Cosmos and Polkadot, which are building bridges to let all these different blockchains talk to each other seamlessly. Now, let's shift gears and look at the traditional financial markets. It's a complicated picture right now. There's a lot of optimism about technology, but it's balanced by economic worries and unpredictable policies. Despite all the challenges, the markets have been surprisingly strong. Since mid-2025, we've seen what's called an everything rally. Gold is up 26%. Emerging markets are up 23%. The S&P 500 is up 16%, all beating cash. It's like the market is climbing a wall of worry, finding strength even when the signals are mixed. A huge part of this is the AI investment boom. The tech sector's returns have almost doubled the S&P 500, with giant AI infrastructure deals totaling nearly $500 billion in potential spending. AI isn't just a buzzword, it's a primary engine of economic growth right now. Let's look at the numbers. The US economy actually strengthened in the third quarter of 2025, with GDP growth forecasts jumping from 1% to 2.7%. People are spending, and that's driving the economy forward. The job market has cooled down a bit but is still stable, and the unemployment rate is holding steady at 4.3%. Inflation is still a little high, sitting at 3.0% year over year, which is above the 2% target, but it's being watched closely. However, there are risks. Policy uncertainty, trade protectionism, and a government shutdown that started in October 2025 are creating headwinds. But even with these issues, most economists believe the chance of a recession in the next 12 months is relatively low, around 33%. This is where our two stories truly merge. The lines between Web3 and traditional finance are blurring faster than ever. Big financial players aren't just watching from the sidelines anymore. BlackRock has launched its own tokenized funds. Goldman Sachs is building tokenization platforms, and JP Morgan was already handling $300 million in tokenized bond trades back in 2022. This shows that the biggest names in finance are getting comfortable with blockchain. This is leading to cool hybrid models. Take the Fuji card, for example. It's a physical card you can use anywhere in the world, but it's linked directly to your Web3 wallet. This is how decentralized assets start to feel real and useful in our everyday lives. And tokenization is the main bridge connecting these two worlds. By turning physical assets into digital tokens, we're solving old problems in the financial markets. It creates more liquidity for assets that were hard to sell, like real estate. In fact, Deloitte thinks we could unlock $4 trillion of real estate value through tokenization by 2035. It also makes operations more efficient. The SIX digital exchange in Switzerland has already shown that tokenized bonds can settle faster and cheaper, all while following the rules. Most importantly, it democratizes access. As one expert put it, tokenization means $100 can get you a token that represents ownership in a major investment. This opens up opportunities for smaller investors that were previously only available to a select few. Web3 is also a powerful tool for financial inclusion. In places like India, it's being explored to expand access to low-cost financial services. Globally, 1.7 billion people still don't have a bank account. Web3 could let them leapfrog the old systems with just a smartphone and a blockchain wallet. So, what does the future hold? It's a future where decentralized tech is seamlessly woven into our global financial system. Web3 is no longer an abstract idea. It's a set of tools with real-world impact. As the rules become clearer, with regulations like the EU's MiCA law, we can expect even more big institutions to join in. The technology will continue to get better, solving today's problems with scalability and privacy. And as the user experience improves, Web3 will finally become accessible to everyone, not just the crypto experts. The convergence of Web3 and finance is one of the most important transformations of our time. It's changing how we think about value, ownership, and money itself. For anyone, whether you're a business owner, an investor, or just someone curious about the future, understanding this intersection is no longer optional. It's essential for navigating the incredible changes that are just around the corner. Thanks so much for watching. If you found this breakdown helpful, make sure to like, subscribe, and hit that notification bell so you don't miss our next deep dive into the future of tech and finance. See you in the next one.